Hi everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get our alerts, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which will include a copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. Well, guys, the S&P 500 on Tuesday slipped 2.2% for the month of October to close at 4193. The benchmark index slumped to its third straight monthly decline, its longest such slide since the first quarter of 2020. Bespoke Investment Group noted that 2023 would be just the ninth year since 1928 that the S&P 500 fell in each of August, September, and October. 1990 and 2016 were the last two times it happened. Compared to a September that lived up to its historical trend of being the worst month of the year for markets, October's fall in equities was more contained. Still, sentiment was largely negative, and the mood hit its lowest point last Friday, a day in which Wall Street's benchmark index ended more than 10% below its 52-week closing high, a definition of a technical correction. The Nasdaq Composite achieved the same negative milestone just 2 days before the S&P 500. Several factors have weighed on markets in October: hotter than expected labor, inflation, and GDP data, geopolitical concerns stemming from fresh conflict between Israel and Hamas, a brutal bond sell-off that saw the 10-year Treasury yield hit 5% for the first time since July 2007, and disappointing quarterly results from members of the Magnificent Seven, which also sparked concerns over their outsized valuation and weightage. Other notable developments during October included the potential end of the UAW strike against the Detroit 3 automakers. We also saw the oil and gas sector saw major consolidation in the form of 2 mega mergers, ExxonMobil buying Pioneer Natural Resources, and then Chevron joining the party by snapping up Hess for $60 billion. As the year moves into November, market participants will be closely watching for the Fed's monetary policy decision today or Wednesday at 2 p.m. and then Powell's press conference at 2:30 p.m. So as August, September, and October have been bad months, there is some positives, and this is what we're focused on right now. Powell can change the trajectory depending on how his presentation goes. We're getting earnings from Apple this week, and then we get non-farm payrolls data on Friday. So if those are factors that the market likes, we could get a nice run here, which November, December, it is seasonally strong period for the market. So there are reasons to be optimistic and there are reasons to be bullish. So that's where we stand here at InsiderFinancial.com. In terms of earnings tomorrow, we get earnings tomorrow from Airbnb, BP, CVS, DuPont, Estee Lauder, Humana, Mondelez, Norwegian Cruise Lines, Qualcomm, and Yum Brands. We're also getting Chinese EV makers NIO, XPeng, and Li Auto. We'll be on watch with October deliveries due to report it. Tomorrow at 9:45 a.m., S&P Global U.S. Manufacturing PMI for October, 10 a.m. U.S. ISM Manufacturing for October, and then we get Powell in the afternoon. I won't be doing any trading in the morning, no alerts, nothing like that, just because it's Fed day. I don't like trading before the Fed announcement. Markets are usually choppy, uncertainty. It's just not worth taking the risk. In terms of small caps and penny stocks, there are some charts that I am liking right now. First up is CDIO. Good day today, up 41%. Almost 5% of the float is short. This is an AI play. The company put out news today. They received innovative technology contract from Vizient for its novel AI-driven precision heart disease test, EPI plus Gen CHD plus Precision CHD. Contract awarded for products that bring improvement to the healthcare industry. So I like this one. Closed at 30 cents, trading even higher in the after hours. This one is on watch. RSI only 49. I think we can get a nice bounce over the next couple of days or continuation in this one. Next up, guys, is Tupperware, up 23% today. I'm really liking this chart. We're breaking through here, consolidated here. This one has been a big spiker. Almost 28% of the float is short. Put this one on your watch list as a short squeeze play. Next up is WOLF, Wolf, out with a very, very strong earnings report today. 16% of the float is short. For the second quarter of fiscal 2024, Wolf is targeting revenue from continuing operations in a range of $192 million to $222 million compared to the average analyst estimate of $207 million. For the first fiscal quarter, Wolf reported EPS of negative 99 cents, which beat the consensus by 19 cents on revenue of $197.4 million. CEO Greg Lowe said, "We kicked off our fiscal year with a strong quarter in both execution and market share. Not only have we continued to win in the marketplace, as evidenced by our third highest quarter of design-ins and a record quarter of design wins, we have clear focus on the ramp of our Mohawk Valley fab. We remain steadfast in our long-term vision for the future of this industry. The market opportunity for silicon carbide stands at $6 billion today, up from $400 million just 5 years ago. This further validates our strategy to invest now to capitalize on the immense opportunities at hand and the significant opportunity in the future. As part of expanding its production footprint, Wolf is incurring significant factory startup costs." So it's losing money because of these. It's investing for the future. The company incurred $8.4 million of factory startup costs and $34.4 million of underutilization costs in the first quarter of fiscal 2024. And we're coming off a major bottom here. The stock was $70 in July, and we're here at 33. I think this one has a lot more upside, and this is the key here. As the only pure play silicon carbide company in the market today, we believe that we are best positioned to capitalize on a decades-long tailwind that represents a $20 billion addressable market by 2030, the CEO said. So I think this is a longer-term play. Wolf, put on your radar screen. Next up is SoFi. 12% of the float is short. Strong earnings report today, with shares now trading closer to their price target of $7. There is more balanced risk-reward skew. This is what Morgan Stanley said. We actually walked away from quarter three results incrementally more positive on the near-term outlook into 2024. They highlighted multiple positives, including a better-than-expected income growth forecast for next quarter, strong student loan origination numbers in the third quarter, and non-lending segments set to accelerate into 2024 as lending revenues slow. So the fintech sector has been absolutely destroyed. SoFi, PayPal, Square, Block Incorporated. I think these are going to get some more tax loss selling back into, in November and December. But I think those are the top plays that I'm going to be looking at for next year as prime comeback plays. Speaking of comeback plays, making a strong move here, PIN's strong earnings report. This is a clear chart breakout on Pinterest. And if you look at here, this is a hammer, closed near the highs of the day. This one has more upside. Again, it's going to be a huge winner, but I think we can be watching this one for above 30, get to 31, make new highs. So put this one on your radar screen. Also, SoFi, The resistance here is at $8. We get above $8, we're going to run back to the high. So put that's the area to watch. Next up is Sunrun. We're looking here at a few bounce back plays. First up is GameStop, GME. This one here has been making new lows, but it nice action today, up 7%. I think the bottom could be in on GameStop. 22% of the float is short. Put this one on your radar screen. Also, Sunrun, 25% of the float is short. Made new 52-week lows, getting a nice bounce here. The worst could be over for this one. Also, AMC, I know this is not everyone's favorite, but the price action here has been just steadily trending higher, off the lows, off of 705. I think the worst could be over for GameStop, and we're just now trading above the 50-day moving average. Let's see how this one plays out. Lastly, I want to highlight STEM. 29% of the float is short. The company just announced a new director. He is an independent director, Ira M. Burns, effective immediately November 6th. He will also chair the audit committee. But what I like about this is it says here, it has extensive experience in management, finance, and accounting from serving as a senior finance executive at large publicly traded multinational corporations, as well as significant experience in mergers and acquisitions, capital markets, investor relations, and in the energy sector, including renewable fuels and power. This stock has just been absolutely beaten up, down 62% year to date. They could be setting this one up for a sale or a buyout. So I'm certainly this is one to put on your radar screen. Could be a longer term play, but I think this has gotten absolutely killed, oversold. 30% of the float is short. I think we could see some movement in STEM, so put this one on your radar screen. And at InsiderFinancial.com, what we do here is we put stocks on your radar with potential outsized moves. As I repeatedly stated, there are always opportunities each day in the markets. The important thing is identifying which stocks to be in to grab that money. The key is trading green, not red. We are looking for those momentum plays that have catalysts. It's all about finding the momentum before it happens and riding that wave. That's what we're doing here at InsiderFinancial.com. To get our small cap reports, we cover low float, short squeezes, recent IPOs, biotech FDA plays, AI stocks, EV stocks, lithium stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com. No spam, your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at InsiderFinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is an solicitation or recommendation to buy, sell, or hold securities. This video is our opinion. It's meant for informational, educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button, hit the notification bell to be notified when a new video is uploaded. Have a great hump day, traders. Bye-bye.